Hello traders, welcome back again to my channel. In today's video, I have a very important class with you guys, which is the two tools you need to get a very sniper entry. One of them is the Fibonacci retracement. The second one is the trend line. These two instruments, these two objects can help you get a perfect sniper entry whenever you're trading the price action strategy, especially when it comes to supply and demand, support and resistance. And whenever there is a breakout, use these two tools, the Fibonacci retracement and then the trend line. So in this video, if you watch it to the end, I'm going to show you how to make use of these trend lines. Without wasting much of our time, we're already into the charts. Let us start the exercise at once. First, let me go and get my Fibonacci retracement. Fibonacci retracement, first of all, before I will start showing you how it is in the chart, there's something I want to share with you guys. This is to show you that a point called the Fibonacci retracement gold zone. So whenever you draw a Fibonacci retracement, you see these two important numbers, 50, 61.8. 50, 61.8, that is the two important numbers. Whenever you see those numbers, those two decimal numbers, you see that whenever price comes to that level, there is said to be a change in direction. You know, I told you that Fibonacci retracement is used when the chart has a trend. So when it is in its uptrend and all of a sudden, like it forms the higher high, forming the higher low, which is the retracement. Draw your Fibonacci retracement. The Fibonacci retracement will show you the points at which the price will get to, and then you start looking for the continuation of the trend. That is called Fibonacci retracement. So this point where there is 50, and then 61, whenever chart gets to that point, just know that trend is about to change and continue its normal trend. Okay. That 50-61, those gap is called the Fibonacci retracement gold zone. Fibonacci retracement gold zone. It is called the gold zone because that is the point where you check out for your sniper entry. So you can use this Fibonacci retracement to get a sniper entry. When the market is retracing, draw your Fibonacci retracement. Once it gets to 50 or 61, also that the market will reverse and start pushing up. Many people use this Fibonacci retracement as their own personal strategy, and then trend line too. So for trend line is the most simplest one. So, but just I'll combine them when as the class is going on. Now let's add this thing to our charts. Look at these charts. You see that the market is in its uptrend because my 100 moving average, the chart is above the 100 moving average. So in this kind of situation, you have to be looking for opportunity to keep buying. Now, let's put our retracement. Let's put our Fibonacci retracement. Now, when the market is in an uptrend, another thing you need to know, when the market is in uptrend, you look for opportunity to buy. Then, if you want to draw, you draw from the higher low to the higher high. Remember, when the market is in uptrend, I am looking for opportunity to buy using the Fibonacci retracement. You draw from the higher low to the higher high. Now, look at this place now is the higher low. This is the all-time low here, while this is the all-time high before the market started tracing. So when the market was pushing up, and at this level started coming down, what will you do as a trader? Draw your Fibonacci retracement from the all-time low, which is the higher low, to the all-time high, which is the higher high. Then what will you notice in the chart? You notice that, you notice something, that when this chart was going down, you see it was going down. When it gets to this particular level, it dropped and then started pushing up. Why? Because it had just gotten to the retracement gold zone, which is the 50. So that was why the chart started pushing up. Let me draw the trend line very well. So that's because the price got to that particular level and it started pushing up because it had gotten to 50, which is just exactly the retracement gold zone, guys. So that is how you get your sniper entry and then enter this trade once and for all. Then that is for this one. The market was still in its uptrend. So if you want to get this one too, so if you want to get the next higher high too, then the market moved up from here to here and then started going down. When it starts going down, you know that I've started retracing. Get your Fibonacci retracement, draw it from the all-time low to the all-time high. You draw from the all-time low to the all-time high. That is from the higher low to the higher high. That's just how to draw it. You draw it that way. When it is in uptrend, I'll still go to downtrend, but make sure you draw from week to week. If you're drawing from candle to candle, you draw from candle to candle, but you're drawing from week to week, make sure you're drawing from week to week. Now, you see, you draw this in when the market has started its retracement. You understand? Like when you drew from here to here and the market started retracing, well, retracement wasn't enough, started pushing up, still draw it from here to here. You understand? And then the market retrace, don't enter yet. Allow it to keep going until it gets to this retracement gold zone, which is from 50 down, 50 and 61.8. Once it gets to that place, that's when, once it gets to 50, start looking for your entry. You understand? Start looking for ranging, manipulation, for trend to continue, for it to continue the new trend. That's just all Fibonacci. That's just how to use Fibonacci retracement. Then if you now want to use your trend line, which I told you that is the most simplest of all of them, you use that one to dictate when there is a break of structure. Do you understand? Whenever there is a break of structure and whenever you think that the market is about to change its trend. So guys, before I continue with the last one on Fibonacci and trend line, let me just do this last one now, how to use the Fibonacci retracement. Like I said before, you drop from the higher high, from the higher low to the higher high. So now you see that the market, when it started going down, when the market started going down, it moved from that low till it gets to this point. That is when it hits them. When it hit that place, it started moving up. This is because it has arrived at 50, which is the retracement gold zone. You start looking for another entry. So whenever you want to trade using your trend line to get a sniper entry, you can use trend line during consolidating period. During consolidating period. Now let me get my trend line now and show you guys something. Now look at this. You draw like this. One. Let me draw another one. You now draw like this. So if you are using trend line to trade during consolidating period, trend line will show you where the market we get to. Like if you're using the Fibonacci retracement, you use it when there is support and resistance. But when you have demand and supply zone or channel or a flag pattern, you are expected to use the trend line. Now look at the market pushed down and hit here, went up, and then get down and hit here, which is the all-time high. Then you expect it to come down and hit. That's consolidation. It went up and hit again. And if you keep drawing, you see that this period is what it has been going on that way. You understand, guys? So when you are trading with trend line, you can use it during consolidating period. You can use it during finance pattern. You can use it during channel pattern. But you can use them to catch a sniper entry. But if Fibonacci retracement, you can only use them whenever the market actually have a trend. Now, this when the market is uptrend. Now let's go to downtrend. Then you understand more. When the market is going down, you drop from the all-time high to the all-time low. From the lower high to the lower low. You see, this is the lower high, and this is the lower low. This is the lower high, and this is the lower low. Lower high and lower low. Now, when this market moves down to the lower low, and it's about to go and form the lower high, if you want to get the sniper entry, if you want to get the particular spot that whenever it gets there, there's every time there's a market to continue its new trend, use the Fibonacci retracement, draw it from the highest wick down to the all-time low, from the lower high to the lower low. Then, like I said before, the 50 is the retracement gold zone. Allow the market to test there. Once it gets to that place, that means the market is about to start a new trend. When the market was going up, just draw it and wait for it to get to that place. And look at how many candlesticks was actually formed within this period until one formed and hits the retracement gold zone, and then the market pushed down. Do you understand me, guys? Learn how to use Fibonacci retracement. It will help you at a long run. Now, from all-time high, which is the higher high, which is lower high, to all-time low, which is lower low. Draw it and then watch as the market goes up. Look at it, guys. When the market now gets, the market has started moving up, that's when you draw it. And then it came here, and this is where it passed that 50 and 61.8, which is the retracement gold zone. And then the market starts pushing down. That is how to use the Fibonacci retracement, guys. Therefore, if you want to make use of your trend line, which I told that you can make use of that one whenever you are in a. So next one, let's go get our trend line. Trend line, you use that one whenever there is a consolidation. Do you understand? Or a pennant pattern, or a support and resistance. You can also use it in a support and resistance and then demand zone. Now let me draw this thing here. Okay, guys, let me now draw my trend line. If you can combine both of them, you can use both of them, it all works. So if you're using trend line, use it whenever the market is in consolidation. So you see that whenever the market moves up, it always finds its way. Like whenever it's in uptrend, if just and start going down, just draw a trend line, the market will still find a way and hit the trend line and then push up. Draw it again, it will come and hit it, go up. Once you hit it like 3 times, I think it's okay. And then push up. Then you can also use the trend line to get your trend reversal. So like as it's happened here now, let me say, just like as it's happening here now, the market actually, it was hitting at the trend line and was going up, hitting the trend line and was going up. That shows that the market is actually in its uptrend. You can see hits this point, although it didn't hit it very well, but it came down and then pushed up. Then at this point, it broke out. It broke out from there, and then it even broke the structure, which is here, and then broke out. Then this period where that is just going up is called the retracement period. Breakouts, retests. For those who have trade retest, break and retest strategy, you see that trend line is just the best for break and retest, because the trend line will just be guiding you the hits, continue hit and continue. Whenever it breaks out from the trend line and it has broken a particular structure, then allow it to still go back and hit that trend line. Then you see at this point where it hit the trend line, the market started pushing down again. That means it's very likely that the market, by tomorrow, the market will keep selling. Do you understand? But if it's actually in uptrend, it should have broken this trend line and keep going up. This is just the simple analysis, just simple technical analysis that I always share with my students all the time. So guys, this is just, I hope this video was very helpful. So guys, this is just small compared to what I always share with my students. I hope this video was very helpful. Now you've learned how to use the Fibonacci retracement. You have learned how to use the trend line to catch an entry and to predict what the market is about to do, especially those that are trading the break and retest strategy. I hope this video was very helpful. Please, I want you to do something for me. Like my video, subscribe to my channel. I always drop educative content like this. So guys, I'll see you guys next time. Bye.